Let's try that again. Let's make sure this is working. Good. All right. Good morning, ARMR Insiders. Welcome to the morning meeting. This is our virtual hedge fund. Grab a pen and a piece of paper. Please come to this desk thinking of yourself as a portfolio manager. We're going to go over our swing strategies on the indexes that drive all of our other investing decisions. We'll go over our portfolios, ARMR Innovative Growth, ARMR Turnarounds and Dividends. And I'll be sharing with you how we may be changing those portfolios throughout the day to day, especially at the close. The weekly close is the most important as we're making investments. So we'll go over that. Top stock to watch, top group highlighted has to be uranium. We'll look at some charts there. I had an entire conversation set for you. I always type out that captain's log for you before I have these conversations. And I had to start over because at 7:22, story started hitting the tape, and we have another tariff tantrum day. So we're going to talk about how to deal with that. Before I dive in, please remember, I respectfully request you take this information, any other information you hear out there, and you realize that you're the portfolio manager of your own assets. You got to figure out your risk tolerance, your goal. You got to execute your strategy, and only you can be the smart money of your own assets. So make your own choices. All right, here we go. Let's dive in. Looking at a chart of the four indexes, S&P, NASDAQ, small caps, and momentum. Now you're going to notice the green boxes and the yellow boxes, okay? The green box, that's when our risk monitor went green on the 24th of April. That's when we put on max risk. So real quick, let's go over how we run money on this trading desk. The ARMR investing way. It's really a very simple step-by-step process to get us on the right side of probability over and over again when reward's worth the risk. That's the only decision we make every single day when we're day trading, swing trading, or investing. Am I getting on the right side of probability when reward's worth risk? How do I do it? 8 out of 10 stocks follow the market. So the first thing we have to do is figure out where the market's going. We have the risk monitor for that. 10 indexes in there. As diverse as big cap, NASDAQ 100, and small cap, IWM. Things like Bitcoin, which is our number one risk on indicator, and treasury bonds. Those 10 indexes give us our direction on the market, increase our probability of success, whether we're swing trading or investing. So on the 24th, the risk monitor went from red to green. So when it's red, we're max cash. When it goes green, we get max invested. And we've had a really nice rip. And those yellow boxes you see are 2 days ago when we cut our swing trading exposure 50%. So we took half of our gains off the table 2 days ago. And I said to you 2 days ago, during a morning meeting just like this, that I'm looking for a retrace back down to election night levels. The key location, the election night level, happens to equal the 200-day moving average. So it's just normal and natural in an uptrend to get that shakeout. On the S&P, that's 575, give or take. So it's not unexpected that we're down here at 575.40 right now. Maybe a little unexpected how we got there, but this is a probability matrix. And so when we get to that box where it goes yellow and we take half of our gains off, what I'm saying there is the probability the market's coming down or consolidating has increased. And so protecting some of our assets, booking some of our profits from our smart entry point makes sense so that we're able to dictate to the market. The market's not dictating to us. We're able to take advantage of weakness like this morning. And so there's different ways markets can consolidate. They can go sideways in a very tight range and then blow out again. It doesn't happen very often, but sometimes it does. And we went over this 2 days ago. The other more likely scenarios. is that the market's going to build a pennant formation. It's going to come down and test support levels. And if the support holds, we're going to get the next swing cycle up move. So let's go over again the ARMR investing way. Risk monitor goes green, max long. Market rips. Not a surprise to us because that's the probability. They were very high that the market would go higher. We just don't know how long or how much. So we get aggressive at entry, April 24th. Market pops. Take half of our gains off the table on our swing part of our portfolio, not the investing side. That's different. Just the swing side. Now there's two possibilities that we're dealing with. This is the beginning of the move to risk monitor red. Let's take the bearish scenario. If that happens, it happens. There's nothing to predict about it. I'm not going to sit here wax poetic on the bond market collapse or any of the other things that you'll hear talking heads go on and on all day about in CNBC. This is not about predicting. It's about looking at the probability scenarios and then just reading and reacting, just executing what we see. We won't have to guess if the risk monitor is going to go red. It'll just go red. Stops will get hit along the way. We'll book more gains. Look, we made money. How much money we don't know until we've booked all of our gains and the risk monitor is back to red. So we're going to give some back off the top. We sold some right near the top. If the stops get run specifically on a weekly basis, so let's say today's a god-awful day and I don't know what happens, stops are getting run. We'll be raising more cash. Risk monitor might go yellow first. And if it follows through to the downside, man, we'll just go max cash. Risk monitor will be red and we'll start all over. That's the bearish scenario. So it's pretty easy. We have stops that we've raised everywhere, right? When the market rips from our entry point, we raise our stops. The market craters through key levels, stops get hit, we raise cash. So it's really easy. That part of this equation is not hard. If that happens, we do it and we're done. Back to max cash, waiting for the next opportunity. The other scenario is that this is a normal pullback in a power uptrend. The move off of the entry point in April was so aggressive. It suggests that we're in a power uptrend, a trend that's going to last longer, albeit have shakeouts along the way. They always do. Shakeouts can last a couple of days. They can last a couple of weeks, maybe a 4 to 7 week consolidation period with some volatility, but holding levels and then blows out again. We don't know. We just have to read and react. Okay. So if that happens, we're going to see movement down to 575. And, you know, when it comes to stops and numbers that I come up with or anybody comes up with, they're not set in stone. Technical analysis is an art, not a science. It could be 574. Market might settle at 576. You know, it's somewhere around 575 with tails in either direction, candlestick tails in either direction, but a consolidation somewhere around the 575 area for the S&P. And for the NASDAQ, it's going to be somewhere around 492, maybe 492, right? So easily 490, 494, somewhere in there. We're looking for consolidation to build. If that holds, the risk monitor is going to stay green, could flip yellow and then back to green. We'll see. But let's say it stays green. And what we're going to get is our most aggressive swing strategy on the S&P that's going to give us a risk on entry point again. So let's go look at that. Okay. This is our strategy going back 31 months, 145% gains on the trading side, not including interest collected on treasury bills in between trades. 31 months, 21 trades. We put the position on here, which was on the 23rd. The risk monitor went green on the 24th. We were long on the 23rd, and we booked a profit. We were up 12.5% in 9 days. Okay, that was on the 6th of May. Then the market blew out again. Okay. Sometimes we're able to, this strategy buys the market back cheaper. Sometimes it pays up for it. It doesn't make a difference. We're taking the white meat off the bone. Then we hold cash and wait for the next entry point. So what's happening now is the market's going to close this gap, which is pretty normal. I mean, markets close gaps. That happens a lot. Come down here and close the gap. So the next step in our ARMR investing way strategy, we were taking money off the table 2 days ago. So we don't put new money out until this strategy gives us trade number 22. So if uptrend's intact, risk monitor's still green, trade 22 fires, number one, we put money into triple the S&P for an overnight hold. That's a swing strategy. It's got about a 9-day holding period. Okay, so that's a quick traded swing strategy. But that also opens the window to put new investments in the portfolio. So we raised 50% cash there 2 days ago for our swing strategy. That capital allocated to indexes, we cut it in half. So we either re-up, we just put that money back to work in indexes. It really depends on the type of portfolio I'm running. Or I might use that capital to selectively put capital to work in my favorite hateful eight names. Now, we talked about this yesterday. We were on the verge of adding Google yesterday and adding Amazon yesterday. And at the end of the day, I said to you guys, we can't do that right now, right? Those are index stocks. The highest probability of making money in index stocks is making sure we're on the right side of an index move. 8 out of 10 stocks follow the index, and particularly these names because they are the index. Okay. So when trade 22 fires, I might own Amazon. I might own Google with that part of my capital, or I might just own QLD, right? I cut down my QLD position. I might jack it back up again. The more conservative investor focuses on index only. Maybe the more aggressive investor willing to take individual stock risk is adding a couple of names to the portfolio when trade 22 fires. Okay. So that's the part of the cycle we're in right now. It's not, the news doesn't really matter. Today it's a tariff tantrum, right? Trump talks about how Apple's going to have to pay a 25% tariff if they don't make iPhones in the US. So moving their production to India doesn't work for him. Okay. And then he talks about how the EU tariff deal is going horrible, and he's going to slap a 50% tariff on the EU. It's not the news that matters. It's the reaction to the news. Where are we by the end of the day today? Not the first thing in the morning. I've actually done something pretty crazy. I almost never do this, but I have a carry portfolio where that portfolio is 100% cash every night. So I'm collecting interest on treasury bills. Market craters like this, I want to put that capital to work and harvest alpha. When we hit 474 on the S&P this morning, I put some money to work. I never trade that in that portfolio pre-market. I never do it. But 474, I put a little bit of capital to work. And now I'm going to look to build that position up. Market's going to open. I'll look for carry entry points. ARMR Insiders will get that going at 9:30. We can all do it together. Had a good day yesterday. We had to work real hard to make our money yesterday, but we grinded it out, making money again yesterday, trading triple the S&P, SPXL, or options. Some of you guys like to trade the options. So market cratered below 575, hit 574. I put a little bit of capital to work. Jumped back above 575. Now it's trading around 574.80. Up a little bit on the trade, but it doesn't really matter. I just wanted to get some of that capital to work because that whole portfolio is cash. So bang, that's an easy trade for me down there. And then I'll look to see what the morning setup is. I mean, the market was down at 573 and change, so it may go back down there, and I'll look to increase that size. Okay. So that's where we are on our trading desk. We're in a balanced position. We booked some profits off the top. We're in a position where we could dictate to the market and take advantage of the weakness. this is a really interesting day for me from the standpoint of reading and reacting to the news cycle. If we're in a real power uptrend, I submit to you that Trump tariff tantrums will burn like phosphorus. Maybe exciting and crazy the first hour or two of trading, but after 11:30, the real direction of the market will reveal itself to us. That's if we're in a bull market. I'm watching right now. I'm looking at my watch. I'm saying to myself right now, how long is it going to take before somebody in the White House starts to walk back those Trump comments? I don't know. While all this is going on about trade deficits and tariff bluster, you know, something interesting is going on right now with the US dollar. And Deutsche Bank's discussing this morning that a 40% decline in the dollar versus all other currencies would eliminate the US trade deficit. So while it's theater for all of this crazy tariff talk, here's the US dollar collapse versus a basket of other currencies. Pretty aggressive. Okay? And we're looking at something like 40% decline in the dollar versus other currencies, and all of a sudden the trade balance happens. What's the biggest beneficiary of that? Okay, the first highlighted group of the day has to be precious metals. We've recently added back our exposure in those green boxes here. We're long SILJ, silver stocks. We're long Nugget, which is twice the performance of GDX in that green box down here. Nugget's looking to open up about 6%. SILJ up about 2%. Gold's looking to open up about 2%. Physical silver is up a little bit today, which is interesting, up about 0.5%. So the physical metals, hard assets, as the dollar declines like that, got to be a place to focus. About 18% of our portfolio, our flagship funds focus there. It's going to have a good day. Hey, let's look at another hard asset. I know Ares is long uranium. So while Trump is talking about trade this and trade that, he's also putting out plans for uranium. So uranium is the highlighted, Cameco is the highlighted stock of the day. You can see this green box down here. We're long Cameco, CCJ, down in here around the 43 and change level. I'm going to switch now to the IBD chart. This is the Investors Business Daily Market Surge chart, okay? I want you to see this green cup and a little handle. Not going to delve too deep into technical analysis right now, but sometimes people are too rigid when it comes to what a cup and handle looks like. And, you know, I don't know about, it's not the originator, but one of the best guys at it was William O'Neill, right? The book, How to Make Money in Stocks, it's the Bible, okay? You should have it by your bedside. You should read it. You should know it. And they talk about cup and handles. Market surge, and full disclosure, I don't get paid for this conversation. I'm just sharing with you the information I use on my trading desk, okay? So, but anyway, market surge is a great way to identify cups and handles because they do it automatically. It's an algo, right? And this is a cup and handle on Cameco, and the breakout, the pivot, is this blue box right here. It's going to gap out above the pivot this morning at 55.50. Talk on the desk, our desk, about how it's too late to buy Cameco if you've already missed it. When we didn't miss it, we paid 43 and change. But it could be added to today as it breaks out of the cup and handle. You could increase the size of that position, 25%, 30%, 50%, whatever you want. You buy the breaking of, so here's the ARMR investing way layered on top of O'Neill, traditional technical analysis. Literally, the reason why I created my algos is because I didn't like buying breakouts. I wanted to get it earlier, okay? So when looking at an ARMR algo, we're long here on Cameco. But when looking at traditional cup and handle analysis, we could be long here. So depending on the size we have on, we could increase our size in Cameco. And then, of course, if we want to, we could go to the other names in the space to increase size too. So like, for instance, uranium, UEC is one of our favorite names. We're not long there yet. There was no reason to be. It doesn't look very good. Bang, it's up. What is it, $6 right now? It's $5.90. This doesn't get started till it closes above 6. But if it closes above 6, that's a no-brainer way to put more money into uranium. Now, I'm not doing that at the open, okay? Because when these assets gap up on a Trump comment, I don't trust it. I don't trust it. I don't trust any asset that gaps up on a presidential comment. Even a presidential action. He signed this bill to do this. That's great. Talk to me later today. If these assets hold the rally all day, can increase the size if we want of CCJ and could put on a position of UEC. That's probably all I would do in the space. Era's got some other names on there. I know we're long LEU, for instance. That's going to have a big pop probably. So there's other names. How about OKLO? That'll probably take off today. So there's other ways to play it. Uranium is definitely the highlighted group this morning, along with gold and silver. So to wrap up our discussions, I'll share with you one more stock, top stock to watch that I may be adding to the flagship fund, and that's Hertz, 44% short position. Really strong action yesterday. Weakness this morning because of the market mayhem. That might give me a shot to add that to the flagship fund. Okay. But it's all going to flow from what happens today on the S&P. So we'll get the live trading desk started at 9:30, Armor Insiders. We'll look at 575 as the area. We'll look at 11:30 as the key time frame. Whenever there's hysteria in the morning off of news stories, I give the market 2 hours to do whatever it wants. Then after 11:30, you start to really see what the shape of the day is going to be. I mean, you might get a trade earlier in the morning. We might get a trade at 9:45 for all I know. But by 11:30, I think we'll really know what we're dealing with today. All right? And then we'll adjust portfolios. So Armor Insiders, if you can't trade with me all day, come into the Slack room, click on the link to the private live stream. 11:30, we'll go over what's happening in the morning and how it might change the portfolio. And we'll do that update again at 2:30 and 3:30 today. So if you can't be on all day, those are the times to come back into the room. If market mayhem is really ugly at 2:30, we're going to want to discuss how we want to handle the last hour and a half of the day. And of course, at 3:30, I make changes. Okay. Any questions you guys have before I go? I'm happy to answer them. Comments, questions. What do you got for me? What's a trader guy? I appreciate that question. Reach out to me. I can go over all that with you. Anybody else got a question? I'm happy to answer about the market right here before I got to split. No? Are we good? Everything covered? All right. I look forward to working with you guys at 9:30. Everybody else, have a wonderful trading session. Thanks for starting your trading morning with me. I really appreciate it. It helps me order my own thinking. I hope you guys have a lot of success. And remember, no matter what I've said or what you hear anywhere else, you got to think for yourself. Figure out your risk tolerance and be the smart money. Have a great day trading, guys.